Hello, everybody. Happy Sunday. Happy very early Monday morning for those of you in Australia. This is the time of the week where we answer the top questions on your minds. And we're going to talk about a diverse set of stuff, but it's all kind of interrelated. Like, what happens if Satoshi sells? What is the impact of DCG on Bitcoin price? If they're forced to sell? What happens if a token is deemed a security? We'll look at some more AI stuff. We'll look at some pair trading between crypto and equities. All of the cool things that are on your minds. So let's just jump in and not waste any more time. And first of all, big thank you to the mods in the chat. Okay, here we are. Disclaimer, edutainment, you know the deal. And somebody said, well, there's not really a disclaimer. Well, you can pause the video and read it if you'd like. But that's what I say. And if you know the channel, I have to say that. And where to ask questions, they all come from Patreon. You guys know the deal there too. And we aggregate them and find the most popular ones that really is just bugging you and you need an answer for. So, and I don't give you maybe the proper answer, but I just give you my opinion that typically is very well researched. So the very first question is from Lamorch. What do you think would happen to the price of Bitcoin and Bitcoin market in general if Satoshi's wallet suddenly started moving, increasing or decreasing? Well, I don't think they would ever decrease. There's about 1.04 million in them. But did I say increase? They wouldn't increase, yes, but they probably possibly could decrease. But let's analyze this real quick as to what would happen if there was a movement. And again, nobody's got a crystal ball, but these are some of the things. So if the wallets associated with the pseudonym Satoshi Nakamoto, the creator of Bitcoin, were to start moving, it could potentially have a significant impact on Bitcoin price. And these wallets are believed to contain a large amount of total supply of Bitcoin, that 1.04 million. And it could lead to a decrease in demand and a drop in price. Additionally, the mere movement of these wallets could be a sign that Satoshi is losing confidence in the future of Bitcoin, which could further contribute to a decrease in price. And I'll go through some of the scenarios that I believe would play out if that were the case. So I have 4 scenarios in mind as to what could potentially happen. First of all, suggestion scenario number 1, basically if there was a significant amount of Bitcoin was moved from a wallet, the market would react very negatively and the price of Bitcoin would drop easily by 10% in minutes. Scenario number 2, if a large amount of Bitcoin is dumped on the market, that would drive the price down significantly. No ifs, ands, or buts. Scenario number 3 suggests that if all the Bitcoin is dumped on the market, I believe the price would very quickly go to $3,000. And some people have that as a target. So that would be what would cause a $3,000 Bitcoin, I believe. And scenario number 4 suggests that to avoid crashing the price, the Bitcoin would be sold gradually over time. Leak it out. So again, to recap on that, a little movement, 10% drop in the market. Dumping it all at once, price goes to 3,000. Realistically, nobody would ever do that. The vision of Satoshi is to give the world an alternative. I don't think he would ever sell. I'm not even sure if he or she or the team is still around. And that's where we are. So it's not something to worry about. But I do always say there's always a 1% chance that this could go to 0. So always factor that in with your investments, not financial advice. Next question from Cryptotherapy. If Tesla is a recession-proof stock, will Bitcoin be a recession-proof cryptocurrency? Well, let's talk about that for a second. I did have a belief in 2022 that Tesla would bear up much better than other assets out there, but I did not expect Elon Musk to sell $36 billion worth of stock in a time where the market was very weak. And many believe, including myself, that attributed to at least 70% of the fall in price. The whole Twitter debacle, making himself unpopular, the dump of the stocks, it was just a perfect storm of poop. But nothing fundamentally has changed with that. So let's explain why I do believe Tesla is recession-proof. 1, no debt. They've got deep margins. Last earnings, I think they had 26, 27% margin. They're making on average $15,000 profit per car they sell. They can engage in price wars, and they are engaging in price wars to put the competition out of business or hurt them significantly. because there's only one other car maker on Earth that makes profit on EVs, and it's a very thin profit. And finally, Tesla can increase margins by increasing volume and become a global dominant leader. They also have a ton of levers they can pull. They can discount FSD, which is pure margin. And as they stamp out each and every incremental car, the margin gets bigger because the cost's full. All right, so that's why I believe Tesla is recession proof. And we will see how it performs this year, but I'm pretty confident it'll do well. Let's talk about Bitcoin. Now, first of all, there's always that inflation hedge narrative, which didn't really pan out during the inflationary environment we had because Bitcoin was still tied to being a risk asset. Now, there's a couple of things that are aces in the hole for Bitcoin being recession proof. One, it's decentralized and is not tied to any government or any institution. And this means it's not directly affected by an economic downturn or a financial crisis. And additionally, the limited supply, people always say 21 million Bitcoin. I believe it'll never exceed 14 million. And I've shared many videos on that as well, because so many are lost. And we had the Satoshi lockup of 1.04 million, etc., etc. And I think, I can't remember the exact numbers, but 67% of all Bitcoin has not moved in quite a long time. In addition, it's important to note that the value of Bitcoin can still be affected by market sentiment and speculation, and its price will be volatile. We just saw that now in a little bit of a dip. But I think one of the things that I still do believe is over time, it has the strongest computer network on Earth, which supports it, keeps it secure and safe. In addition, it is the hardest asset that I can find on Earth. Therefore, over time, fiat will debase and Bitcoin will go up. And as we saw, it shot up 32% in a couple of weeks. And that's the type of things it can do despite being beaten down. And we will be discussing this and other items tomorrow, by the way, on DCA and CTO's channel. So let's talk about one other thing to bear in mind, which is important. This is the Bitcoin divided by the M2 correlation. And Bitcoin peak was well ahead of the M2 peak. I put a little orange arrow in there signifying that. But it's clear that showing money supply raises all boats, i.e. the increase in M2 helps inflate all assets. Now the government is trying to reduce the M2 money supply, but they're doing it albeit very, very slowly. And they are also trying to do it for the Fed balance sheet, which is also proving very difficult. Now, the correlation here is at the bottom. You can see sometimes it's correlated, sometimes it's not. So, being recession, also the fact that the money to supply could come down a little bit should not impact Bitcoin too much, is my conclusion. So, hope that helps. Next question. An Tesla question from Elijah S. Has Elon destroyed Tesla's moat by not patenting their work? So for those who don't know, a moat in business is a sustainable competitive advantage, like the thing with crocodiles and sharks around a castle, to keep rivals at bay and help protect long-term profitability. The number of moats that Tesla has is bombastic. We'll talk about those in a minute, and I think that's more important. But Elon Musk, I think, stated a few times regarding patents, they will not file patents on a technology in order to encourage other companies to adopt and build on its innovations. They are sharing some of their patents, and that open source approach is intended to make the world a better place, increase adoption of sustainable energy, and all that other good stuff. So, it's very, very brave what he does, but there's so many other elements to this that we need to dig into. First of all, my view on patents, and I have two. One is most patents are BS. They cost time to file and take a lot of time, then approvals and searches, etc. And once they're up, and after all those legal expenses and time and everything else, people can take your patent, modify it, and reissue it. And even if you think it's very like yours, the enforcement is very costly and very timely. And of course, patents can they be enforced in China? Well, sort of, but it's very hard, and you need to issue them first, and you got to wait 31 months. So that's my view on patents. And maybe, Elon could be painting himself as a hero. Look at me giving away all my patents, but really he believes they are bullshit too. Who knows? Who knows? Let's talk about the speed of evolution, which is very important. And there's an AI question coming later. And the way in which technology and processes and manufacturing and medicines are developing is staggering. So the speed at which Tesla is evolving far exceeds the pace at which you could ever even create, file, and or get patents approved. So I believe it's nonsense. And the most important thing you need to look at is moats. As I mentioned at the beginning, these are just some of the top moats that Tesla have that no other car company has right now. None. First of all, they have locked up supply, things like aluminium, lithium, far ahead of other competitors. They weren't even thinking about lithium supplies, 3-4 years ago when Tesla was. They have locked up suppliers for key parts and infrastructure, whether it be a big stamping press, etc. They have a charging infrastructure that would take years and billions for other companies to rebuild. They also have the best battery technology. They have the best FSD. They have the best manufacturing process. And they have relentless innovation. They never, ever, ever get tired of rebuilding, improving, making things better, ripping out processes, ripping out parts. That is what makes it different. For a traditional car company, ICE manufacturer, or even some of these EV companies, they outsource everything. And they pull everything in. And to change anything is just ridiculous. And by the way, in this list, I haven't even mentioned gigafactories, which are the machine that builds the machine, which into itself is very special and unique. So that is what I would look at. I don't think Elon Musk cares about patents because he's smart and he knows where not to waste time. In addition, very important piece of history here, and I've always said this, is, the patent part is the genius is, per Thomas Edison, 1% inspiration and 99% perspiration. So the whole sequence behind this is, anybody can have an idea or a concept or a plan for something. That is 1% of the effort. The hard part is execution, execution, execution. That's why Elon Musk slept on a factory floor for 3 years to nail Giga Texas and fix problems around battery manufacturing. Now, execution involves taking all the necessary steps to make the idea happen, planning, organizing, implementing, etc., etc. And a great idea doesn't guarantee success. But what does is excellent execution. And that is key. So can the other car companies catch up and execute as good? Maybe, but they're 5 to 7 years behind. And that's why the next 5 to 7 years will be good. So great question. Next question from Crypto SG. Pair trading. Let's say Bitcoin, Tesla, and MicroStrategy. For me to convert one asset to another, do I need to own the asset that I'm selling? If yes, how does it work with brokers? Do I need to find a broker that offers both crypto and shares or equities? And I am in Australia. So we're getting this question a lot because I think 2023 will be a year where we swap stuff around. One horse runs and then it runs out of breath, slows down, the other horse catches up, and we need to be able to jump between both. And I think that's going to be an important strategy for the choppiness we have ahead this year. We're not full bull run, although many people would think, wow, given what we've seen, we could be, but I don't think so yet. Now, that being said, it's important to be on a train than sitting on the sidelines, in my opinion. Now, let's talk about pair trading for crypto and equity. So the first scenario is, say, for example, you could own Bitcoin on an exchange. We'll talk about some of those exchanges in a minute. So you'd own one Bitcoin, and then you could sell that Bitcoin and buy something like 130 shares of MicroStrategy or 160 shares of Tesla or whatever the case may be. And then when you believe that other asset is run, when you look at the pair, you swap back. So you'd sell then your MicroStrategy and you buy a Bitcoin. Now, you can also do this with options. I sometimes do this as well. So, for example, if you believe that the price of Bitcoin will rise relative to the price of MicroStrategy, i.e. Bitcoin is oversold or MicroStrategy is overbought, you could buy a call option on Bitcoin and maybe sell a put option on MicroStrategy. And there's many, many variations of this as well. But that would be like creating a bullish spread trade. But there's so many different alternatives. You could also do things like, instead of selling MicroStrategy, you could sell a call at the money against your position and then buy Bitcoin back. Because again, it's all fun and games, and that's what we like to play with here. Now let's talk about places in Australia where you can do this. So places where you can pair trade crypto and equity brokerages. Sometimes you don't necessarily have the pair, but you have the ability to buy Bitcoin and buy MicroStrategy, for example, or buy Tesla and Bitcoin or Ethereum, or whatever you want to do. So Interactive Brokers does operate in Australia, and they do it. Tastyworks does as well. Robinhood doesn't work in Australia, but it does work in the US and I think in a few other places. And Fidelity have the new crypto offering. I don't know if Fidelity operate in Australia, but I do know they're the fourth biggest asset manager on earth, so probably do. And then there's Webull and eToro, and I haven't used. I've used 3 of those 6, but the 2 at the bottom I can't vouch for, and I don't know the status in different countries. But do your own research, find out in the community what people prefer best, and there's lots of people in Australia who know exactly what works well. And this is a very extensive discussion, which we will do more on later as well. Now let's go to the next question, which is kind of related. And this is with all the subscription tools for TA, info analysis, etc. available these days. Could you do a quick rundown on the top tools that are worth the investment for the subscription? So basically, TA has so many elements to it, and there's so much out there that you can buy. But we're very much focused on simple tools that are easy to kind of have more success in the market. So one of the things that we have done and spent the last 13, 14 months building is tools based on my style. And yes, I know 2022 is a crap year, but the other 31 years, in my experience, have not been bad at all. So first of all, my approach to everything is a pair, like the previous question, pair trading, very important. And that comes from trading currencies a long time ago. Arbitrage opportunities always exist, and everything mean reverts. And there's other nuanced models like dollar cost averaging on steroids out there, trend models, macro investing models, arbitrage models, etc. And we will do a rundown of all of them next week on Patreon, show you how they work together and how they can be used to support each other and based on the level of trader you are. So a quick summary of some of them is the DCAS model. That's the dollar cost averaging on steroids. It's for all levels, Bitcoin top and bottom. I was kicking myself missing the top in November, and I want to make sure that doesn't happen again. That's a tool that identifies when we're getting close to the top or the bottom, and also has detailed on-chain analytics embedded into it too. Layer out, that's coming soon. We've been working on that for the last 4 months. That hopefully will be coming out in its first iteration in the next couple of weeks or month or so. ARB Cloud is designed for Bitcoin proxies to identify arbitrage opportunities in the market. Then you got the macro model. That's for macro traders, macro investors. If you're looking at oil versus oil stocks or gold versus gold mining stocks, how do you play that? Then IDSS, which is more for the advanced trader. Now, a quick, very brief, just a summary of the results you can get from these things. And of course, nothing is guaranteed, but DCA on steroids beats traditional DCA. DCA could be like investing $100 a week. Instead of that, this will help you stay out of the market or stay out of certain assets certain times and go in heavier at other times. So simple example of results over 10 different assets. You can see here you could spend over a couple of years, say $176,000 in regular DCA, and you would generate a portfolio worth $332,000 even during a bear market. And with DCAS, you would spend less money, about 15.5% less, but end up generating a bag that's worth $448,000. So 31% more bag for 15% less. And that the overall delta between that is a lot, over 100%. So that's kind of the idea between that. And you can see that on investanswers.io, and there's a video for it too. ARB Cloud is MicroStrategy, Bitcoin, for example, or Bitcoin HUT, etc. It tells you when one thing is oversold, another is not, and you swap between assets. And in 15 days, you can generate 11% more Bitcoin by just trading in between. In fact, some people have been very successful. One made 34% more Bitcoin in only 4 trades. And that's the ARB Cloud. And there's lots more kind of fun tools like this that are coming out as well, just to help people get ahead and beat the market, because I still believe we've got 2 or 3 years left before the algos and bots get so good they're going to be hard to beat. So that's kind of my view of where things are going. I don't want it to sound depressing, but it's going to get more and more competitive. And a lot of people actually have this theory, or a lot of people ask the question, why is the VIX, the volatility in the S&P 500 so low? And I'm convinced it's because bots and algos are doing all the trading. And that's why it's unprecedented. That's why this time it is different. Anyway, next question. Craig M., what is the likelihood that Solana will ultimately be deemed a security once Fed regulations come? Would that change your outlook for Sol's future? So, great question. And I'd like to rephrase it to not Solana, but to any token at all. And if Solana is deemed a security, that means 18,000 others will be deemed a security too. So here's a quick rundown of the impact these 18 other tokens that are out there. So tokens, first of all, would be subject to federal securities laws, US federal securities laws and regulations in the United States, which means things like AML, anti-money laundering compliance, and KYC, know your customer. And this would mean that any trading or exchange of any token would have to be done through registered exchanges, and any individuals or entities selling or promoting a token would have to be registered with the Securities and Exchange Commission. Very, very important. That means things like airdrops, etc., would not be possible. And this would have a significant impact on the market of a token, because it would reduce the number of exchanges and platforms that could legally trade such tokens, and and increase the regulatory compliance for costs that do that. Now, investors also would have to comply with all investor protection regulations. Additionally, it could also limit the number of potential investors in a token, which could also bring down the price. So there's lots of other stuff. Now, again, they can't kill everything. I'm pretty convinced the US will not kill everything. I know there was some initial MiCA legislation out of Europe that tried to kill everything, but they're fixing that. They're making it better. So they know blockchain and crypto is the future of finance, and we'll see where it all goes. But the easy way to think, if a token is deemed a security, what are the two choices? And I summarize them real quick here. Number one, they will be forced to regulate and comply with the laws in the said country, or go offshore and work on DEXs. And that's why I think it's kind of funny, because if the government tries to quash this, everything will go offshore and everything will go decentralized, and nobody will be able to stop it. That's the problem. But the US government will want to find a way to monetize it and generate money and track taxes, etc. So I think they'll be semi-reasonable in how they regulate this. I do believe as well, big tokens will comply and small ones will go offshore, as I mentioned. But the SEC has shied away from issuing any clear definition of what criteria is used to determine whether or not a token is a security. And I'm very familiar with the Howey test, etc. Most of them will be deemed securities. But as a result, cryptocurrency is still in limbo, still operating in a fog, but they can't just kill everything. And just look at the XRP lawsuit. It's gone on for years. They got nowhere. Imagine them doing that 18,000 times. Of course, they're going to go after the biggest fish first, but it's going to take forever and huge resources. So they got to make it scalable, clean, easy to comply, logical, rational, etc. And I'm hoping smarter minds will prevail within our regulatory bodies. So hope that answers your question. But for people to be scared and run away from the opportunity that we have at hand because they're afraid of what the government will do, I think that could be an opportunity lost. Next question is from JGI. If DCG, that's Digital Capital Group, collapses as everyone is predicting, what would be the worst case scenario on Bitcoin price, and how low can Bitcoin go, or has the market already priced it in? You nailed it. The market priced it in. We saw that last week. We saw it's mostly priced in. News came out. Bitcoin didn't fall that much, although it's falling a little bit now. Who knows what's happening behind the scenes? But last week when all this came to be, it didn't really miss a beat. Dipped for a short period, but then bounced right back. Now, the wild card is Grayscale. What's going to happen to Grayscale? And that's the piece I want to focus on. First of all, DCG crisis is largely concerned around another round of liquidation, particularly Grayscale. And the question that everybody has, will it be liquidated? And I don't think so. So Grayscale operates the different trusts. They're all trust products. And under law, SEC law, Anglo-American law, whatever you want to talk about it, the trust product is highly independent and regulated and isolated. It is created by a contract, and the termination or liquidation must follow the contract. And a lot of legal experts have taken a look at this over the last couple of days. And I think there are very clear conditions that stipulate when the trust could be liquidated. And that would be things like force majeure factors, such as the collapse of the Bitcoin network, maybe Satoshi moving his wallet, driving the price to 3,000 or to zero, the collapse of the Bitcoin market to zero, major lawsuits, etc. But the conditions for Grayscale to liquidate, is really, really difficult. So I think what's going to happen is they're going to find a way to use that asset, sell it, and hopefully DCG can pay back some of their creditors. And that would be great if they could just sell that whole prepackaged asset to Fidelity, and Fidelity could reduce the fees and then get approved as an ETF, all that good stuff. Or Valkyrie, or BlackRock, or who knows. But that's kind of the plan. Now, there's one other thing is, why are we talking about Grayscale? So first of all, the management fees are huge. 2% of 650,000 Bitcoin is a lot of money, especially as the price of Bitcoin goes up. And Grayscale itself is not a party to the current debt relationship. As I mentioned, it's an unique island out there. It does not owe any money to anyone. And in this case, there is no need or urgency to liquidate Grayscale. And in other words, the current Genesis crisis is unlikely to lead to passive liquidations of Grayscale at all, in my opinion. And we'll see, but it is a very, very valuable asset. Now let's look at the discounts. They did drop to, I think, about 35%, which was great during the week, but now they're back at 40%. So it's not perfect on Grayscale Bitcoin Trust. And on the ETH Trust, it was at 60%, went down to 46.77%. So the signs are positive that these discounts are going away, which means there's no fear yet left for Grayscale. I think people have read the legal jargon behind the contract and how it's set up, and it can't be touched. So I hope the short answer to your question is, will it impact Bitcoin price? No, not for a long time. And this stuff will take a long time to work through the courts anyway, working at the speed of law. Not that, sorry for any lawyers out there, but it's very difficult to do that stuff right. Next question is from Fourth Turn Nomad, an AI question. Can you please look into the adoption curve for Stable Diffusion Stability AI project and compare that to the adoption of Bitcoin and the fastest moving alts? This is an interesting one. So for people who don't know, Stable Diffusion is a text to image model that will empower billions to start create stunning art within seconds. I've been playing with the site I use actually for some things is labs.openai.com. It's the DALL-E software, and it is incredibly impressive. You can build the most amazing art in seconds. I'm concerned for the artists out there, so support your local artist when you can. But let's look at what it is. So first of all, SD, let's call it Stable Diffusion, is a text-to-image AI that's able to create images using text descriptions with artificial intelligence. For example, you could say, paint me a picture of Dali on the beach with the moon in the background. And it'll do that. And then you can add in any kind of context as well. And it uses a deep learning algorithm that's been trained on billions of text and image pairs to understand underlying patterns and to produce its own image when given a new text input. And the example here is of Stable Diffusion action, where the algorithm is inferring the depth of an input image on the left, and it's generating new images using text and depth information. So the other easy way to think about it is, the secret sauce behind it is what they call the artificial neural network. This enables AI to have human-like creativity. The neural networks are designed to analyze and exchange data across different nodes not unlike a blockchain, actually, coincidentally. And this is exactly like data transmission between neurons in the human brain. And this is where Stable Diffusion's creativity comes from and how it's able to generate original content such as text, images, and even audio or video. Again, the pace at which all this stuff is coming out is stunning, absolutely frightening as well. Now, the technology has been around for a while. It's quite new. It's built on the neural networks that have existed for a while too. And there are many others out there like GPT-3, DALL-E 2 is what I use. And the neural networks have been around since the 70s. But what they didn't have were billions of training data to run the algorithms against to be effective. Also, the computers lack the processing power to handle the work of neural networks. And third, the computer processing power at scale is extremely expensive, or at least it was up until now. And now we can do it. And with the proliferation of the internet and social media and computational power, now everything is possible. And this is also not unlike how FSD works within Tesla too. So again, the changes we are going to see over the coming 3 to 5 years will be mind-blowing, mark my words. So where were we in terms of adoption? So in comparison to Bitcoin's adoption curve, and it's very, very difficult to say exactly where Stable Diffusion is, but I'd say extremely early, less than 1-2% of the public are actually using it. It's so new, there is lack of publicly available data on the number of users in order to gauge its adoption. The best data we have been given right now is the number of Twitter followers. It's about 41,000. By the way, you can use the same type of approach to estimate how popular a certain token is too. And this is quite impressive, 41,000, given that the Twitter account has only been open for less than a year. But it's still very small in absolute terms. And like my Twitter has about 135,000 followers. Bitcoin has 5.7 million. Elon Musk, I don't know how many, 100 million or 50 million or whatever. But this puts Stable Diffusion squarely very, very early in the adoption curve. Now, there's one other thing as well that's coming up. And this might be a barrier to all of this AI stuff and creation. What happens if it is stepping on some legal toes? Here we are talking about legal stuff again. The biggest barrier might be the legal realm where lawsuits and regulation will be coming. Because Stable Diffusion becomes more widely used, it will reproduce art and images that may have a claim from artists or companies that say it's their intellectual property. And the AI doesn't understand copyright and intellectual property, and it'll certainly be challenged in the courts. And there are already lawsuits of artists filing suits against Stable Diffusion over its image renderings. And overall, the technology is quite promising, but watch for the legal stuff. Just imagine, I think there was some musical artists were buying NFTs for, $50 million and $100 million. This thing can go out and replicate it, make it even better in a second, and it's yours for free. So that's the problem. It's going to really compress values for some art out there, and that will upset many artists. So we try to weave that tapestry of all sorts of things, bouncing around between Satoshi selling and AI and linking it all in between. So I hope you like it. And this week, favorite part of the show, Bigelow, the tiger, was taken into sanctuary after a zoo closed, and Bigelow is now roaming cage-free in the nation from paws. So big thank you all for your support there too. And let's jump in and do some live questions. And unfortunately, the market's down a little bit, but it's coming back. Well, it fell right before I went live, but hang on. We'll make it through, everybody. It's just this volatility, and the first 3 weeks of this year have been astounding. Hey, Red Hat, I see you there in Berlin. Schöne Gruß and vielen Dank. And next, Clint Alexander. Thanks for all the information, Spur. Thank you for being here. I appreciate it. One Brydom, which will run higher by 2025 and 2030, Bitcoin or Tesla, in your opinion? This is what I look at all the time, and I think about all the time, because my two biggest positions are Bitcoin and Tesla, and I've been kind of practicing swapping in between, just testing the water. I moved about 1/80th, I think it was, of my Bitcoin into Tesla which was not a good time because Bitcoin has run faster than Tesla. I do believe, if you look at points in time, what are the odds that Bitcoin goes to 60K in 2023? 0. While the odds that Tesla goes above $300 in 2023, much higher. So I do believe firmly that Tesla will outperform Bitcoin this year. Next year, as we come up to April, the pre-halving run, then it's going to go 35, 40K, probably pretty fast. After that, all bets are off. Once it halves, the reward halves, we don't know what's going to happen. But looking at the adoption and the scarcity on exchanges, we could see, I said, I think it was last year or the year before, there will be a time in our lives where we see $10,000 a day candles. That could happen in the next couple of years. And if that does happen, that'll move much faster than Tesla. So in my bear case prediction, I think it's out to 2026, Tesla outperforms Bitcoin. But that's a bear case for both assets, and Bitcoin really doesn't go anywhere. So that's the only case in which it beats it. My expected case, Bitcoin beats it for 2026 and 2030, because it's just by virtue of the fact that it's so scarce, so hard, and it's diminishing because people are losing their keys and coins all the time. And we know because we're on the receiving end of those inboxes. So one Brigham, hope that helps you. But again, when you look at the overall risk, I do believe, despite the recent volatility of Tesla, I think it's a less risky asset by virtue of their sheer dominance. So hope that helps. Shane Johnson, where would you buy Sol after a big recent run-up? Where would I buy it? Currently, I buy on Coinbase right now because everything else has kind of gone away. But that's what I do. I've also dabbled with a couple of DEXs, swapping USDC for Solana on some Solana DEXs as well. So that's kind of what I would do. And I'm actually getting much more confident and secure with DEXs, believe it or not, than traditional exchanges. And it's a lot cheaper too. But make sure there's lots of volume being traded when you go to a DEX. Nikki Begato, any major red flags that you see in the near future regarding Tesla's performance? George Gammon seemed to think so a week or so ago. Deepest apologies. I don't know who George is, but I do watch Tesla very, very heavily. I think they played a blinder of a move by cutting their prices so aggressively because the demand for Tesla vehicles has shot up. I mean, I can't remember the exact numbers, but in terms of Google search terms, Model Y went from being 47th on Google search list to number 2 just in a couple of days. And the inventory is drying up real fast and they'll have pricing power back. But now the whole lack of demand story is gone. They wiped it very quickly. So from that perspective, red flags, they've got supplies buttoned up. They're going to be ramping megapacks. They will also be launching Cybertruck in H2 of this year, the second half. That'll be huge. I believe every vehicle will be sold north of $100,000. It'll be a high volume product initially. And then they'll just keep on stamping out the Model Y. It'll be the number 1 selling car, probably on Earth. It already is in many countries. And after that, then March 1st, the other big tailwind is the Gen 2 launch. That's going to be fascinating as well. And from there, that'll get the markets excited. But sometimes they have things like Battery Day and AI Day, and the markets don't quite understand what they're saying. So the markets don't get quite excited. So it could be a nothing burger. But either way, there's just so much good stuff happening, so much development. And then new gigas, maybe Mexico, maybe Indonesia, maybe both. That'll be huge as well. So it's you got people have to think of sometimes after what we've been through last year, think of these investments as kind of a waiting game. But my confidence grows stronger every day in the assets that we look at here. We keep checking the numbers, checking adoption, checking roadmaps, checking development, checking competition, and everything just gets better and better. So we're lucky in that regard. Thank you. Oh, sorry. Let me say Shane Johnson. He means price. Got it. Okay. Thank you for that. Not aware. My bad. In terms of price, so this is tough. A lot of people are kind of waiting for sub $8, back to $10, sub $13. A lot of people believe it's going back to 15. You know, if Bitcoin tanks and goes back under 20, easily you could foresee Solana hitting 16. But the question is, what is it going to do? Let me just see if I can pull up a good chart here to see, because everything kind of, more or less, the performance of Bitcoin has been kind of stunning. In terms of where we've come from over the last 3 weeks to where we're going to go, I don't know. A lot of it will depend on macro. There is some news coming out in 8 days or so with the Fed. They're going to do 25 basis points. There'll be a lot more data coming into. Tech earnings are coming in. Tesla earnings are coming in on Wednesday. So it's, when you look at this is the other big philosophical thing. When you look at an asset that's going to go up, like, for example, let's talk Tesla. I don't want to talk about Solana because it's easier if you talk about something like, people are waiting for a sub $100 Tesla. Okay, imagine it does go. You could have bought it 120 or 125, but no, I'm waiting for my 100. But when you see an asset you know is going to $400, what difference does that $20 make at the end of the day? And, you know, from that perspective, what I like to do is layer in layers and go in harder every layer down, typically layers of 3, you know, pick, say, Solana. Look at the price now. It is just under $24. Will it go sub 20? Maybe. Maybe put a limit order for 20% of what you want to buy at 21, or just get some now at 23.5, 24. And then as it falls, layer in. That way you can make sure you are at least on the train. And that's the way I like to play it. It's very hard to nail the absolute bottom. And sometimes people are sharing knowledge like, oh, Bitcoin's going to 3,000. That's when I'm going to back up the truck. That is, when you wait for that, you might just be sitting on a park bench for the rest of your life, because if Bitcoin does go to 3,000, it's well over, game over. It goes to 9,000, it's probably game over too. So that's just the way I look at things. So think about that. There is no hard and fast answer. I personally probably would buy a little bit more if it went to 21. And if it goes to 16, buy some more. But right now I'm in aggregation and holding pattern, especially what we've seen lately. You know, with people talking about, oh, I'm selling, I'm getting out of crypto because it's gone up 30%, or people have been DCAing in for the last 8 to 10 months. If they exit now, they're at break even. They didn't make or lose money if you DCA'd over the last 8 months or so. And that's kind of the philosophical issue. So sorry to be so long-winded in that one. There's no hard or fast answer, but pick your 3 spots, get a little bit on the train now, and then layer in as you go forward. And also compare the relative value of this to other assets. There could come a time when Solana's completely overbought, and then you swap over to something else. And we'll be watching very carefully for that too. So with that, everybody, I want to thank Jeff Hammer, 0x, Kiwi Robin, good to see you, Forrest M, Dog1, AC1, KNP Dot, Andy, Zeno V. Appreciate you all for being here. Wish you all a great Sunday. Market is a little bit bumpy. People are falling asleep, but by 6 p.m., hopefully it'll rebound. That's when the Chinese market starts buying. So thank you, everybody. Have a good night. Thanks to the mods in the chat too, and all the stickers. Thank you.